So I think I'm going to mix it up a little bit in comparison to the other guys that have spoken this evening. At the bank, we have what we call a portfolio, an innovation portfolio. We have 70% stay in the game, 30% win the game, and 10% change the game. And hopefully what I speak to you about this evening will be in that 10% change the game space. So I'm going to be speaking to you about what we're calling Agora. Agora means marketplace in Greek. And I'm going to give you a little bit of context before I start to tell you what it is about. So this is the world we live in. I'm sure you've all seen these beautiful CB Insights diagrams of how banks are being unbundled and attacked, and there's this huge fear of disintermediation. Banks are taking on different routes to try and get around this and work with fintechs. You've got these incredible competitions taking place, like BBVA Open Talent. Some guys are taking equities, such as Sandton Ventures. And then there's your Open Bank project of offering APIs. And obviously, in a world of PSD2 regulation, this is going to become required. So I'm going to refer you to that handsome gentleman at the top of my slide there, Henry Chesbrough. He is the godfather of open innovation, and we've been chatting to him quite a bit recently, actually, around our corporate strategy and opening up and becoming permeable to our environment. And we're sort of looking at it like Apple does. They have this incredible operating system. They do not own everything, but they own the ability to allow developers to come into their world and provide solutions that matter to customers. So on that note, let's talk about what Standard Bank has done in the past in this attempt to keep up with fintech and serve our customers and become permeable to our environment. So before working in innovation capability, I worked in an area called Beyond Payments. They were a subdivision of Standard Bank, and some of their success stories include Instant Money and SnapScan. SnapScan having been a collaboration with a company called FireID. But this model was not sustainable. It was very high touch, a lot of internal dev, and really not completely leveraging off of our external partners. We then said, great, let's start taking equity. We had an internal corporate venturing. We trained the members through the Stanford Center for Professional Development and their corporate venturing course. And guess what? We realized that equity is complex. It requires some very interesting capital reserves on the side of the bank, and it isn't necessarily the only way to engage with people. You don't have to own them to be in a mutually beneficial relationship. So we started to ask a few questions. We went to thought leaders, entrepreneurs, and our customers, the people that really matter. We asked them, do banks still benefit you in your life? Are they relevant in the future? And do they add value? And how is this value handled, and will it be handled in the future? And we got some great answers. It turns out banks are still trusted, they are still relevant, but they are relevant in a different way, and they need to start considering their core competency as a value exchange in different ways. How can they do that? So, open APIs, solutions, not products. People want a home, they want a place to live, not a home loan. And they want to be spoken to in their language, which I think is something that these fintech companies are getting right. Bankalese, it turns out, is not easily translatable. So if you look at a bank today, you've got your beautiful core banking system, and then you've got a few silos of categories of products that are offered. You've got investment, lending, and payments. And then what we do as banks is we make our systems and silos our customers' problems. And we force on them products within those silos that don't really speak to their lives. They don't want a student loan. They want to get an education and become valuable members of our economy. And they don't want to get a home loan. As I said, they want a home. They don't want to have a savings account. They want to prepare for the future. So this is what we're talking about, major life events. Customers live lives. They don't wake up in the morning and say, I'm going to go bank today. And that's what Agora is about. It's not a product. It's an engagement model. It's a way of saying we have these incredible services and a backbone, a secure backbone, that we can use to collaborate with external parties to deliver real value to our customers in solutions that are more relevant to their lives, as well as obviously get all the data analytics and value from that perspective, as well as new revenue models through new channels with new solutions. And this is how we are now going to start working in Agora to create products. We understand customers, we understand their needs, and it turns out that students don't want student loans. They want to go to varsity, they want to get to varsity, they want to pay for books, they want to pay for food. So we started prototyping a crowdfunding platform in collaboration with an external partner called Frontier Labs. They own the crowdfunding platform. We collaborated with them to create Phoenix. This was prototype 1. We are obviously working in the same way as everybody else, design thinking, lean startup, so it's an iterative method. This was prototype 1. It's obviously been iterated on quite a lot, and we're looking to go to market by the end of the year. External donors and companies looking for sort of feel good, BE, tax benefits. They can go and contribute to the specific needs of these students based on their profiles, and we're serving a real need within society. How does this become scalable? Obviously, not every interaction can be high touch, and how do we access as many new products and solutions as possible? So what we're currently working on is a platform where companies can create submissions to gain access to integration, as well as other needs that they may have, for instance, regulatory guidance, etc. And we've used a lot of the sort of lean startup design thinking canvases to evaluate these ideas. And I don't know if you guys have ever filled out one of those canvases, but you start to see very quickly how bad your idea is and how unvalidated it is when you start filling in those little blocks. And obviously, each interaction is different. Who owns the IP? What are the contracting negotiations? Who owns the brand? How do you brand it? These things become quite complex, and it's only fair from an ethical perspective that this is a mutually beneficial relationship rather than the sort of big bad bank exploitation. So benefit and performance. There's obviously a whole bunch of new revenue opportunities, access to new data, product development, and access to human resources, like people who are creative and amazing and don't want to work in a 9-to-5 bank, regardless of how cool the culture is. And we now have access to them. We allow them to offer their products with our support. And then obviously creating entrepreneurship and job creation.
So the model you have is 70, 20, 10. You were talking about the 10 now.
Yes.
The 70, how corporate are those antibodies in the bank, and do you think they'll adopt some of these ideas?
So they obviously, in every large organization, there's a huge legacy. We're a 155-year-old bank. But as I think the guys from ABSA spoke to, culture is hugely important. We are obviously doing the same things as everybody else: culture change, DevOps, moving into smaller, multifunctional teams, going out and validating concepts with customers prior to actually building products. And we're seeing some real traction. But obviously, yeah, the antibodies are there, but that's the challenge, right?
I guess as a follow-up to that, there's a perception that Standard Bank has got very big, very heavy legacy architecture. Is probably the worst in all of the banks. Do you find that that's getting in the way of being able to innovate what you guys need to do, or do you find that you can actually bypass them by more modern methods?
So yes, it is a challenge. We are an old bank with a lot of systems, but with that legacy comes a lot of benefits. There comes brand trust. We're a universal bank, obviously, offering a full breadth of products. So you can start looking to things like online share trading, global markets. You can combine that with current accounts. Having an established bank has both its pros and cons. We're also starting to find ways around it. So getting access to different systems, sometimes that requires sort of what we call the human API. But yes, it is a challenge, but we are getting there. And the most important thing is really what the customer sees, not our system issues.
In one sentence, I'd like to understand the innovation that you presented. Is it Agora, or is it Phoenix? And was Agora the process, or is Phoenix the product? And what about open innovation, and what about APIs, and how does that have anything to do with Agora or with Phoenix? Just trying to understand.
Sure, so Agora...
One sentence.
Agora is an engagement model with external parties to create new products, such as Phoenix, which serve customers in new ways via integration with the bank, such as through an API.
Good.
Great. So as a follow-on for this, so it's you present there a framework to engage with partners to
Correct.
be more user-centric and create new products. You mentioned some of the key things need to be decided. How do you make it mutually beneficial? Who owns the IP and so on? Can you briefly take one step deeper and explain some of the principles you have in mind when answering those questions with the partners? How do you split the upside? How do you approach IP and so on?
Great. So there's obviously a few different models that are possible, and it will be on a case-by-case basis. If an established fintech comes to us and they have a brand, they require nothing but a backbone, we will purely provide transactional capability and share in that transactional revenue. If they are looking to apply the Standard Bank brand to gain some trust, we would then maybe co-brand, as well as also we have a need from an internal perspective. A lot of our internal business owners are frustrated with the current silos, and they're looking to create products with external parties. So we would then probably fully brand as Standard Bank. and the IP ownership would sit in the right place on a case-by-case basis.